Imagine you're sitting at the very top of a massive stadium in the so-called nosebleed seats. The excitement is electric. You're here for the biggest game of the year. Suddenly, the announcer shouts that $10 million in new money is about to be dropped into the crowd. Your pulse quickens. You are ready to catch a stack of cash that could change your life. The billionaires, politicians, and corporate magnates in those luxury boxes simply open their windows and collect the cash before it even drifts to the lower levels. Ecstatic, they immediately rush to the high-end concession stands and private shops, buying goods at the old prices. They've just turned this new money into real wealth, while the rest of the stadium hasn't even realized what's happening. Meanwhile, you're stuck way up in the nosebleed seats. By the time a few bills finally reach your section, the concession stands have run out of everything. To restock, they must pay far more for new supplies, driving prices up drastically. That $5 hot dog now costs $15, and the championship hat is gone. You didn't get richer, you were diluted. The VIPs bought goods at a massive unearned discount, while you, the average worker, paid a hidden tax. This scenario perfectly illustrates the Cantillon Effect. It shows why grocery bills soar, housing becomes unaffordable, and why the wealthy seem to play an entirely different game than the rest of us. Understanding this effect is the only way to stop being the person stuck in the nosebleed seats. Money isn't neutral. Richard Cantillon, an 18th century banker, realized that money flows like water. Where it lands first matters far more than the total amount. Those closest to the king bankers, landowners, merchants got rich when new gold entered the economy, while farmers and laborers were left behind. Today, the king is the Federal Reserve, and new gold is digital credit from quantitative easing or stimulus, flowing first to the largest financial institutions. When the central bank injects new money, it doesn't send checks to your mailbox. Instead, it creates digital credit and buys bonds from massive banks and financial institutions. The new money enters at the very top of the economic pyramid. Early receivers, banks, corporations, asset managers can buy assets before prices adjust. Ordinary workers, whose wages come later, are left paying the price through inflation. To win, you need to think like the rich. Become an owner, not just a worker. Invest in scarce, appreciating assets like real estate, index funds, and commodities. Use fixed-rate debt wisely. Borrow now, repay later with devalued money. Increase your income velocity by gaining rare skills, moving into high-demand industries, or owning a business. Don't let your labor's value be diluted. Position yourself to catch the money first. You now understand the Cantillon Effect. Stop sitting in the nosebleed section. Own assets, protect your purchasing power, and get ahead of inflation. Hit like if this made sense, and subscribe for more strategies to beat the hidden inflation tax.